Welcome to Biztech's Investor Conversation Show. Our guest today is Farah Jaafar, Managing Director of Fusang. Fusang is Asia's first licensed and regulated public and private blockchain financial ecosystem for security tokens and digital assets. Now, to tell us more, welcome to the show, Farah.
Hey, hi, Brian, and thank you for having us.
Now, thank you for coming on the show, Farah. Now, for starters, tell us about Fusang and what you're all about and your presence in the region.
Yeah, so Fusang actually is Asia's first fully digital stock exchange. What we have, and it's for the private and public market. So what we do is we basically take an asset, a debt, a commodity, we tokenize it, and we list it on our exchange. It's as simple as that. And we're fully regulated. And let's just be clear, because obviously this space, let's be honest, this space has been quite marred with a lot of question marks of late. Yes. So we're fully regulated. We're regulated under the Labuan Financial Services Authority, and which is under the Malaysian Malaysian MOF, Malaysian Ministry of Finance. Mm-hmm. And we're also regulated in Hong Kong. So we're fully regulated. And the idea for us is really to allow for the next wave of digitalization to enter the markets. We want to make it as easy to be a stakeholder of a company as it is to buy something online. So if you're buying stuff online, you're buying into the company. Isn't it logical that if you're buying into the company and adding to its profits, it should be as easy for you to become a shareholder in that company? That is our aim.
Okay, interesting. But a lot of us, this is all very fuzzy stuff. Could you give us a 101 primer on security tokens and digital assets and how this plays into your ecosystem?
Okay, so I think of late, especially with this crypto winter that everyone is having. So really, there's a lot of jargon. I'm an old school financial services girl, and coming into this business 6 months ago and exposed to it 5 years ago, coming into Fusang 6 months ago has been a huge learning curve for me. And one thing that I've learned that I think everybody should understand is there's digital assets and then there are digital assets. At the end of the day, what's important, right, is to remember two things. Number one, the digital asset, i.e. the digital wrapper of an asset, should never be the key consideration. What should always be the key consideration is the asset anchor. What is your asset? And so I bring us to this crypto winter, which means basically the prices of crypto are going down like never before. Yes. They call it a crypto winter in the business, okay? This crypto winter basically has given us an opportunity to really look at the asset anchor. Now, I want to talk a little bit about Terra Luna because everyone wants to talk about Terra Luna, excuse me if I may speak, and that whole idea of it being pegged to the US dollar. Now, was it really pegged to the US dollar the way you and I as business people understand it? The answer very quickly is no, because it was pegged to an algorithm that then was pegged to the US dollar based on that particular program. Now, it is essential to understand the differences here. When you look at a real security token, what you're looking is you're taking an underlying asset and you're breaking it down to bite-sized pieces via the power of blockchain and smart contracts. Okay, and that's why people say digitalization, Web 3.0, this whole blockchain movement allows for inclusion because it allows for people to enjoy owning something worth owning, okay, at a smaller ticket size, a smaller ticket value. Now, I go back to my normal box standard example. If you understand the asset as a cake, and if you understand the dividends of that asset, right, whether it be a coupon rate for a debt or dividend rate for a share or whatever, as the icing. What tokenization and digitalization allows is for that cake to be cut up into very small pieces in a very easy way. So guess what? Everybody can have a piece because it's no longer important. It's no longer needed for you to buy a dividend share, let's say, for example, at 100 ringgit per unit. You can buy it at a lower unit because digitalization will allow for the management of the share in a very efficient manner via instant settlement and a transparent cap table.
And so here's what it is for the ordinary folk, the mom and pops of this world. So essentially, and if I could break it down in traditional ways, if you've got a Google share that is $1,000 a share and you want to buy one lot, that's 1,000 times 1,000. When you securitize this in a token, you can buy it in slivers of that. And how small is that about correct, Farah, in terms of breaking it down?
Just the cake. Everyone can have a piece of cake. Marie Antoinette said, let them eat cake. And we say, yes, why not? Okay, because everyone can have a sliver that they can afford, right? And that's why the whole era of digitalization carries with it such a huge element of financial inclusiveness, because it breaks it down. And we're talking to people about tokenizing a sukuk. So, you know, at the moment, the markets are extremely volatile. Today, everyone is saying there's going to be a worldwide recession. Tomorrow, you know, they're saying, oh, maybe it's not so bad. You know, nobody really knows where we're going, to be honest. When you listen to the analysts and you start listening to them on a daily basis, you get confused, right? And at the end of the day, one of the safest investment areas is bonds. Mm-hmm. Bonds hardly ever default. Generally, especially sukuks, okay? Let's look at Malaysia. Let's bring it down to Malaysia, where we're licensed. And let's look at a sukuk, for example. There's only ever one sukuk default, and that was in Indonesia 2 years ago, ever. The coupon rates are high. People believe in the element of Sharia compliance. And yet, the mom and pop never participate in this business.
Yeah, because it's a big ticket. I think the minimum size is quite big. Yes.
It's so huge. If you're a private wealth client, you go into a money market instrument, the minimum ticket size is 100,000 to buy into a fund that owns part of a sukuk. That's how big it is, right? You're not even buying into any sukuk. Now, if you tokenize the sukuk, could you or could you not, all of us, enjoy part of that coupon rate?
No, of course.
That safety, that safe harbor. And why not? So, you know, I think that is what's important for us to remember. It's not about the technology. The technology is a facilitator. Let's not get caught up in the technology necessarily. Yes, it's important to understand the technology, okay? But the most important thing to understand is the asset anchor that the technology wraps. What is the quality of that butter cake?
Yes.
Do you want that butter cake? And if you do, now you have an option to have it in a small slither. That's tokenization.
Now, Farah, then let's use a specific example related to you with your bond with China Construction Bank.
Yes, that was very unfortunate. Yeah. Because the Chinese government basically decided against it in the last minute. But really the idea was that. The idea was to start tokenizing. Now, the issue with tokenizing, not the issue, the challenge that a lot of legacy systems have with tokenizing is that there isn't a lot of control.
Okay.
So within a tokenized environment, there is free movement of tokens between borders. And that's why you'll find now that a lot of regulators are starting to look at the situation and saying, we need to regulate this. We haven't got a choice anymore. We can't leave it. It won't stay still, and we need to start regulating. Exactly. So the regulation involves, you know, and I think a lot of people don't understand the amount of regulation legacy financial services has to endure almost in order for us to put in money in Malaysia and take it out, let's say in Singapore. The transfer of funds, the foreign exchange, and all the rest of it, that in a way has to be replicated for the digital space. When you look at cryptocurrencies, when you look at tokenization, it's important. And that's why the multilateral organizations are looking at things like VASP rules. And that's rules that control virtual assets crossing boundaries. So these are all work in progress by multilateral regulators in order for us to have a safer environment. It doesn't mean it's not safe at the moment. It just means that investors need to be extra aware, and they need to really make sure that the people that they transact with are regulated. because a lot of platforms are not regulated.
And that's going to play into regulated exchanges like yours hands, because people
Yes.
will gravitate towards properly regulated exchanges like
It has
yourselves.
to be. It has to be. And that's the movement you're seeing now. And this is why, in a way, the problems with cryptocurrency at the moment has allowed security tokens to really shine, because people are starting to look at the value of the underlying token. Because there are two types of token, a security token and a utility token. A lot of people say a coin is a security token. What is that asset? Okay, if you have a security token that links you via a legal contract to a piece of gold, let's say, and you can cash out via liquidity, then you have a real asset that has a digital wrapper. But if not, a lot of it is just marketing and hype, like the NFT market. So everybody talks about the NFT market, right? Non-fungible tokens are a form of digital assets. However, what is that asset quality? If you're looking at a painting brings with it an IP right, a physical ownership right that, let's be honest, via digitalization will not happen, okay? So we put aside that physical ownership right, we go into the IP right, the intellectual property right of owning a piece of art, let's say. Is the IP right embedded within the non-fungible token or not? Because if it's not, if something goes wrong, where is your right to recourse? Now, this is what's important for people to understand. Yes, the prices go up. Yes, the apes are very cute. But what is your right as a shareholder of this token? If everything goes wrong, what can you bring home with you?
This crypto winter that you talked about earlier, do you see a shakeout happening in the industry?
Absolutely,
overall?
a much needed shakeout, actually. And really, at the end of the day, it's what I would like to call a growing pain. It's growing pains of the industry, right? You have to start sieving and filtering, because so far it has been running gangbusters, right? It's just absolutely, it's a great market to be in. If you look at the Bitcoin price, for example, it's fantastic. But do people understand there's a thing called burn rates? Yeah. Okay, which means they can collapse the number of Bitcoins, right? At any one point. It's like a bonus issue, but you don't have to explain, you don't have an AGM to explain or an EGM to explain to your shareholders, because as token holders, what you are actually shareholders. Yeah. Let's be clear, the fundamental capital market premise and ethos does not change because of the digitalization or the tokenization of the asset quality. They use different words and phrases, but fundamentally it's all the same. I want all your viewers to understand, it's important.
So fundamentally, is this the direction that global regulators are going to be taking in terms of securitized tokens? And as
yes.
a way to bring the cowboy industry really into a safe and regulated space?
Well, first and foremost, I wouldn't call them cowboys necessarily. I think there's a lot of, I think that the fantastic, innovative people out there, people who are so into the engineering of the tech, and they're so passionate about it. I think it's fantastic. I think a lot of what we're seeing today is a combination of legacy capital market people coming into a space where people are so passionate about what they do and are blindsided. So what you have is an opportunity for a market to really grow very quickly, almost to the point of euphoria in certain elements without any downside. People are refusing to look at downside 6 months ago, a year ago. But what needs to happen is that a reality check needs to happen. And that reality check is this, and I've been quoted as saying this so many times, right? The way forward lies in the middle. You cannot, and we cannot continue financial services the way we have so far due to globalization, due to technology. And I think COVID has allowed us to accept technology. The people who were less open to technology have now no choice but to accept technology. That's what COVID has done to technology. And because of that, the digitalization of our lives is a given.
Yes.
And the financial element of our lives has always been there. Now, what we're seeing is a confluence. Those two elements have come with full regulation and less regulation. What we're going to see is a middle ground. And in that middle ground, the future of finance will thrive, because we will be in a space where we can really benefit from digitalization. And when I say digitalization, I'm not talking about online banking. I'm talking about taking the way, the architecture of financial services, turning it on its head, using smart contracts, blockchain technology, artificial intelligence, and really pushing it to the point where we allow our lives to be governed not by technology, but for us to use technology to benefit our lives. Because at the moment, I think it's a bit inverse. We are being pulled forward by technology. I think when we start to understand technology and use it more intelligently and accept it as the new technology, digitalization, blockchain, for example, I think that's when we are really going to be able to live our lives the way we should, you know, and that's the promise that's really interesting for me personally anyway.
Okay, then I've got to ask you the multi-billion-dollar question then, Farah.
Okay.
Through a macro lens, how fast do you see this happening across the Asia-Pacific region, particularly in ASEAN?
Asia is where the digitalization grew. So if you look at hubs, right, you've got, you know, and I'm not talking on financial services here, right? I'm talking about the core, the important people in financial digitalization, and they're the engineers. They're out of China, out of Vietnam, out of India. Okay, this is where the core lies. Malaysia's got such a great bunch of talent. It's incredible, actually, in Malaysia. And that's why I feel personally that Asia is where it's going to push forward, right? A lot of the thinking with regards to regulation is going to be global and is going to be led by presumably non-Asian regulators or multilateral organizations. And we will adopt it as a best practice and as a standard. And I say, when I say we, I mean Asia. So you're looking at a situation, I don't know if you read it yesterday, that a crypto association in China has decided that identity will now be a prerequisite in order to be responsible. Google it. And this is not even regulation coming from the PBOC. It's coming from an SRO, almost like an association, saying that this is what we're going to do. And this association, you know, you've got Alibaba, you've got Tencent, you've got JD, you've got everyone in this association. And they've all agreed that identity will be linked to wallets now, to ownership. Because there is a recognition that unless this moves forward, the whole system will collapse. Because identity is very important.
Exactly. And then it also adds to the whole transparency element that regulators are worried about.
Absolutely. And once the industry, people like Fusang, when you come on and become a client of Fusang, it takes 2 days to open an account because we do multi-factor authentication. We do face recognition. We ask for UBO information, and yet we are a digital player because we understand that at the end of the day, unless there is identity linked to all this digitalization, it will never really take off because it cannot be adopted.
Now, Farah, what's ahead for Fusang for the rest of 2022, 2023?
We are so excited. We are so excited because this crypto winter has allowed people to understand digital assets properly. So what we've been doing so far is saying, look at the asset anchor. Please look at the asset anchor. What is your underlying asset? And let's look at it and see if we can actually unlock value. So for example, we're talking to people who have gold mines in Indonesia, looking at how these gold mines will be able to be tokenized via ownership of those mines without even extracting necessarily the gold.
Just want to jump in here a little bit and bring this back to the old world.
Yes.
And the old world, how this used to happen, and on the Australian Stock Exchange, for example, mining stocks used to be and still is a very important component.
Oh, they're massive. They're huge. Yeah.
It's huge, right? But you also have these tiny mines or discoveries, and the way for them to grow and raise capital to actually extract the mines, the commodities from the mines, was really to list them on an exchange.
Yes, but
to be fair, this is no different.
I need to interrupt you now. This is something very fundamental that I myself have learned. Okay, I've not learned but realized. The old school way of doing things is you set up a business, you go into the mines have to make money for 3 years, you have to meet the listing requirements, then you unlock value. And that's why people say, oh, it's not about unlocking value when you list in an exchange, it's about raising capital. So really, who has funded this? It's all internal, it's the bankers making money, which isn't bad, okay, because everything has to work, but this is the legacy way of doing it. Fast forward, right? Why are all the exchanges introducing specs? What are specs? Specs are companies that don't have any history.
Yes.
Right? Because it's the promise of the future. And this is what the digital element has brought into legacy finance, right? Because when you buy into an ICO, or you buy into a white paper that could be a security token, or you buy into a company that has a promise of the future, there is no historical element there.
That's correct. You're betting on the
future,
potential and the future.
Correct. And that's why I think there's going to have to be a coming together. The way the stock market, and I've had a lot of experience in stock markets, the way the stock markets have worked just cannot keep up with the pace of the world today. Who can wait 4 years, 5 years to gain track record in order to list, for you to move at the speed that the world now requires for you to move? No one can. No one can. And so there has to be a coming together in the middle. And that's why the digital wrapper or the tokenization is so important. And the fact that you can unlock value for illiquid assets is incredible. And when I talk about assets, I mean debt, I mean commodities, I mean any kind of assets, paintings, wine, orange juice, whatever, for as long as there is a strong underlying asset anchor, you can tokenize it, trade it, create a primary market, a secondary market, and unlock value, where before it was just simply not possible.
Farah, it's been a fascinating conversation. Thank you very much for coming on the show. But before we leave, any final thoughts you'd like to leave us with?
Digitalization is not scary. The fundamentals have not changed. Just remember to understand the digital wrapper, and remember that at the end of the day, water will always find level. The asset quality will always reign supreme. That is the only thing that everyone has to remember.
Farah, thank you very much for taking your time to come on the show.
Thank you for having us. Thank you very much, Brian.
I'm Brian Fernandez, and we've been speaking to Farah Jaafar, the Managing Director of Fusang, on Biztech's Investor Conversation show. This video and podcast will be on our social media platforms as well as our website, www.Biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.